Alright guys, good afternoon. This is Dylan with the YZR report. This can be your daily brief for September 13th, 2022. Before we hop into any stories, I took the last week off unexpectedly. I had a family emergency come in, so I just want to say something real quick. In the last less than 12 months, I've had two family members overdose on fentanyl. The first was my uncle, who unfortunately passed away due to that overdose, and then the second was my sister last week. So drugs are real, guys. If you know anybody struggling with that, reach out to them. At the end of the day, there's nothing we can do to force them into any kind of help or anything like that. They have to make that decision on their own. But it's important to let those people know that you see them, they're loved, and you do care about them greatly. But so with that, I took the week off. We're going to get right back into it this week. I wanted to get back in yesterday, but I just wasn't feeling it. But without further ado, let's get into some news. Obviously, today was the U.S. Consumer Price Index report we saw get released from the Bureau of Labor Statistics. So what we're going to go over, obviously, you guys can see up top, we're going to go over the CPI report. We saw that came in year over year plus 8.3%. It was higher than expected. Of course, markets reacted negatively to that as expected. We're going to go over the 10-year yields, bond yields, and how those are surging higher, and what we talked about a couple weeks ago, and how if those continue to rise, markets are not going to like that. We're also going to talk about how banks are now beginning to vote in favor of a 100 basis point hike in this upcoming Fed FOMC meeting. We have yet to do a 100 basis point hike, so this would be the first out of this year and in a number of years. So this is definitely interesting, something to keep an eye on. Again, the Fed's going to be behind. The Fed's already behind inflation, so even if they raise 100 basis points, it's not enough to reel this in. It's just going to continue to run rampant. But we'll go over that later as well. We're also going to cover a UKR missile attack. I have information that it seems that those missiles were long-range missiles. This missile attack actually pushed Russian forces back. And we haven't seen an offensive move from UKR against Russia until that movement. And this source tends to believe that those has sources. We'll go over the video. I'll link it in there. But he states that those missiles were actually NATO member fired, meaning that those missiles were launched not in UKR and rather neighboring NATO member nations. If this is true and it becomes validated, it's going to shift the entire layout of this battle here, which might be why we saw Russia pull back, as they're planning a new offensive. Changes the whole board. So we're going to go over that, and of course we'll wrap up with the European Union energy prices for the day ahead. We did see those pull back last time I did a video for you guys. We're going to see today that those are starting to ramp back up with issues with Gazprom, of course, and Nord Stream 1. And not being open. So let's hop right into it. So right off the bat, we're going to go over the CPI here, Consumer Price Index for August 2022. What you guys are going to see, headline figure obviously was that we rose 8.3% year over year. If we're looking at this on a month over month, it's going to be 0.1%, which might not sound like a lot, but in hindsight, we'll look down here. So you guys can see for a month, we were rising at about a 1.3 in June. We saw the 0 in July, which doesn't mean inflation wasn't rampant. It's already high. Just year over year, you're going to see that depicted better. So what you're seeing here is this graph really just kind of makes things look okay or better. In reality, they are not okay. Don't let them fool you. Whether it's the mainstream media or Fed Chairman Powell trying to tell you, or they're showing you graphs like this, right? The point is, inflation is still rampant. And even when you take energy out of this, you would see that it's still ridiculously high for August. And a lot of people would assume that energy drove a lot of this. But in fact, when we pull that out of the equation, you'll see that it's still rampant. So we'll see where this goes. It's going to keep going. I would expect, like I said, the Fed maybe throw in a 100 basis point rate hike. But again, that's not going to fix this problem. We're going to see inflation continue to rise for many years to come, or at least until, and years is a long way out. I don't think this system can sustain more than a few months, if that. So I say years in a I suppose, in a very hopeful manner. But inflation will stick around until this financial system collapses, which is inevitable. We've been kicking the debt can down for a number of decades now, and I think it's time it all comes down. So there's your CPI. Everything I show you guys, any article, any report, any video, it's all going to be linked below in the description box. So you guys can follow that, share it out, bet it, know exactly where these stories are coming from. So moving right along though, we're going to go over, look at some charts real quick. We're going to go over the dollar. So what we're looking at right now is the dollar on a daily chart. What I said last video is that we didn't want to get back above 109. In fact, we got above 109 today, and you can see that we're still making a fresh high. On the RSI, Relative Strength Index, we came down to the 50 midpoint, and we had a perfect bounce. And what I would expect now is a lower high, which would be a top touch of the 70 mark, topping us out. If we break above and we end up making a higher high than what we see just above here, breaking above the 70, we're going to have a different story altogether. If Fed raises rates, we might see a pullback in the dollar a bit, but again, they do not have this under control. So let's look over at some yields, 10-year yields. This is huge in my opinion. If you guys have been following me, you know I've been talking about this nonstop, and I wanted to see us curve off here and then fully test this demand zone and possibly even lose that demand zone to come down to about 3%, which would be right about here, which pairs well with our 50 EMA. Instead, we saw today with the CPI report come out, money just go right back into bonds. So if we make a higher high than what we made back here, which I believe was June 14th, that high is going to be 3.499%. And we're currently sitting at 3.422%. So not far off from that. There's still hope, though, that we come up, we tap this, and then we begin our correction wave down, which pairs well with the RSI because we made a higher high here. This could be a lower low if we just breach out a little bit and then pull back, and that would confirm our future downtrend to pull back to the levels previously discussed. Real briefly, let's look at the 30-year. This is getting interesting as well. We made a new local high here. We're currently at 3.5%. It's not good, guys. This is a debt market. And I'm gonna sound like a broken record here if you guys listen to my other videos. But if nothing else brings the house of cards down, like some kind of global conflict, a solar flare, anything outside of financial collapse, if that fails to bring down the house of cards, I guarantee you it will be the implosion of the global debt market. Guaranteed, hands down, and it can't keep going much longer, especially when you start seeing money piling into to bonds like this and leaving equities, commodities, things like that. And of course, when we saw the surge today after the CPI report, we saw bond surge, we saw the dollar surge. So commodities such as gold, silver, food, things of that nature are all priced in with the dollar. So if the dollar is going to run high, you're going to see a pullback across those commodities. But when this debt bubble does pop, the first thing that's going to begin to soar are going to be your commodities. Just go look throughout history and you'll see that economically this is exactly what plays out. So get your silver, of course, get your gold, precious metals, God's money. Of course, the US dollar and all other fiats aren't backed by anything. They're just candy wrappers. Buying silver today, will you see a pullback to lower than what you bought in at? Yeah, more than likely. So if you guys recall, in 2020, I believe it was in July, we saw oil go to -40. So the numbers that you're seeing for the value of all these assets are not the true value. If they want to send something to the negatives, they can do it. 2020 is a great example of that with oil. So buying now, yeah, you're likely going to see a dip lower, if not severely lower. But at least you're acquiring that, because when we take that massive dip, you might not even have the availability to order physical, meaning that you won't even be able to get an order into the COMEX or a bullion dealer, and they may not even be operating to get that shipped out to you, right? Or the postal service might not even be active. That sounds extreme, but we're living in unprecedented times. I don't want to take too much of your guys' time on the charts here. We'll just touch real briefly. Let's look at the S&P 500 futures market on the daily. We're seeing a heavy pullback all day today. I would expect that we find a bounce here on this diagonal support. If we don't, it's game over down to the demand zone that you guys see here. But I would expect that we see some relief before we make that breach. We also have the fib level support at 3915. NASDAQ, same story, right? We're almost right on the diagonal right now. So same thing. If we lose this, it's an easy short once we get the test back. What I mean by like a test back would be something of this nature. Oop. Where we breach it and we come back and we wait for that back test. Once it's confirmed that we're not able to regain that support, then you can go short on this, targeting your fib level support down below, or even just a little bit above it to make sure that you close out that trade and you don't miss it in case it gets front ran and we don't come to the exact fib support that you see outlined here. Touch Bitcoin real quick. We're in the range that I've pointed out for quite a number of days now, since the 30th of June. So we have the EQ. I said if we get above the EQ and we can hold it and get above the 50 EMA, which is this orange line you see coming down, then it's an easy long targeting the top of the range up here. We did not sustain that. We saw the US CPI report come out today, dropped us right down just like everything else. So there, we got some charts there. We can go over that in a few days, see where things develop. But let's move on to a story real quick of the banks are beginning to want to shift into voting for a 100 basis point hike in September at the Fed's FOMC meeting. So Bank Nomura, some analysts out of there, have began commenting this morning that they believe that we will see a 100 basis point hike. Is it going to make a difference? Short term, very lightly. Very lightly. Midterm, long term, absolutely not. They are not going to be able to rein this in. So it just goes in to say how analysts at Nomura do believe that we will likely see a 100 basis point rate hike. Now let's get into the missile attack that we saw that was launched via Ukraine forces. It was the first offensive attack that we saw that Ukraine actually was able to push back Russian forces. It makes you wonder, is this a change in weapons? We know that indeed it is a change in weapons, likely new weapons that were sent in from NATO members, because at the end of the day, this is a proxy war. At least as we speak, it's a proxy war. If we can get confirmation, as Dave Hodges is actually stating here to Mike Adams, he has sources where he's confirming, I can't confirm this myself, but he's confirming that those missiles were actually long-range missiles and that they were not launched even in Ukraine, but rather within a NATO member country within the surrounding area of the Eurozone. Now, if this is validated, it changes everything, guys. It changes everything, which might be why we saw Russia pull back so heavily, is because it's no longer a proxy war or a conflict just between the two nations there. Of course, Russia has like Belarus that is willing to side with them. There's other nations involved, but that's what you would call a proxy war, right? Where we don't have boots on the ground that we know of, but we're supplying arms and monetary relief and things of that nature, making it a proxy war. Now, if in fact NATO member did launch those missiles and it's confirmed, at that point it is a war decree from NATO with Russia. Changes everything. So we're going to follow this closely. If you guys want to listen to the whole interview, I found it excellent in my opinion. I love Dave Hodges' report and his intelligence. So it's a 36-minute interview. Definitely check it out. Again, any video, any article, anything I show you guys is going to be linked below in the description box. So be sure to check that out. Let's wrap this up though with the day ahead prices. Moving over here, we are seeing a bit of a pullback the last couple weeks. Now, obviously, with US CPI report, conflict escalating again, Gazprom issues, all of these factors, we're now seeing that everything's coming up. So you can look here on the ticker side, up 8%, up 6%, Bulgaria's down 1%. But again, we're at like, on average, about 500, 400, 500 euros per megawatt hour. Insanity. And this will not sustain. Something I wanted to point out last week, which I wish I would have, we were seeing these prices hitting massive limits, like 700 euros per megawatt. And I didn't state it, but I felt that the Eurozone was due for some form of a distraction because it was becoming very mainstream. We were ahead of the story, of course. Many other channels in the alternative media were ahead of this. But when we began to see the mainstream media and politicians bring it into their regular conversation, it usually is a hint for me that we're about to see a distraction event to pull public attention away from that. And what did we see on September 8th? We saw that the Queen was announced to have been passed. Whether she passed prior or she passed on that day, doesn't really matter. They decided to go ahead and announce it, which makes perfect sense for them, right? It gets everybody's attention shifted. For at least 10 days, the United Kingdom will be kind of shifted elsewhere and not paying as much attention to what we're seeing in the Eurozone price-wise here, electric-wise. Um, but let's see how it goes. It's only Tuesday. I hope you guys are prepping. I hope you guys are getting your precious metals. I love you guys. I appreciate you. You can find the Year Zero report on Bitchute, on Rumble, YouTube. We have a Telegram channel where you can find more content than any of the other platforms that we post on. Post regularly on our Telegram. And you can support Year Zero report via our Patreon, which you guys can check out. All that stuff's going to be linked below. We have a variety of different tier packages that I offer, whether it's going over technical analysis to be able to trade in these markets, or a digital library pass where I upload monthly all kinds of titles from esoteric, hidden history, to economics, to you name it. I mean, survival, prep, how to make a hydro generator out of a used washing machine during a grid failure or grid down event, things of that nature. But be sure to check that out. We have a ton of stuff out there. But I appreciate you guys. Stay true. And keep on trucking. Keep on trucking. But I love you guys. I'll see you tomorrow for another daily brief.